Let's get in the management of Supriya Lifesciences into this conversation now. We have Saloni Wagh. She is the Managing Director at the company. Saloni, good afternoon and thanks for taking the time out. Saloni, my first question will have to do with your operating margins. Now, from what we understand is that you have about 15 products which have the benefit of backward integration, and about 75% of your revenues come from those 15 products. The other aspect that could potentially be playing out in favor of your margins is that you have a relatively larger exposure to regulated markets. So among these two factors, what is it that's actually keeping the markets much higher? Is it one case which has a higher influence on your better margins as compared to the other?
No, I think both have the equal amount of influence on the margins. The backward integrated model helps us to have a complete grip on the costing because we don't outsource any kind of advanced intermediates. We manufacture right from the basic stage. So we have a very good grip on the costing. And at the same time, more penetration into regulated markets where the average selling price of the products is significantly higher. That goes back to the margin. So at one side, we are actually saving costs. On the other side, we are getting better average selling price. So both are adding back to the margin. So I would say 50-50% to both.
Right. Saloni, hi, Varsha this side. So sticking to the margins, now this recent quarter we had a good uptick in margins. But I suppose I understand that your guidance for the margins has been around 28 to 32%. Are you being more conservative while guiding the margins, or do you think that there's still an uptick in margins in FY25, maybe about 30-31%?
Yes, for FY25, we are expecting an uptick in the margin. We are expecting the margin to be somewhere around 34%. Moving forward, also 32 to 34% margin is something that we are very confident of maintaining. And this is predominantly happening because of more products now moving into more regulated markets. So other than the top 7-8 products, which you referred to a while back, there is a set of about 8-10 products where we have completed the regulatory formalities, and we are expecting good penetration into those markets. So definitely, I think the margins would be on a slightly upward trend, and 32 to 34% is something that we are confident maintaining in the long term.
Understood. So 32 to 34%. Now, talking about your revenue. So in your last call, I remember you had mentioned that H2 will actually be better for Supriya than H1. So are you sticking to that thought process, number one? And what is the revenue? Because you have been guiding that 22 to 23% is the revenue guidance that you have been giving for next 3 years. But in H2 you did almost in H1 you did almost 33% growth in revenue. So again, on the revenue side also, are you being conservative while guiding at 22-23%?
Yes, definitely. I think there is a lot of scope for the company to do far better in terms of revenue growth. H2 in revenue will be slightly higher compared to H1. But previously, our main product range was antihistamine. So there was a seasonality impact. But with the newer products coming in and scaling up, we are trying to have more balanced quarters. So moving forward, you will also see that each and every quarter would be more balanced in terms of the revenue as well as the margin. Definitely with the new products scaling in, the CMO piece coming in, the CMO formulations piece coming in, we are expecting a slightly higher revenue uptake as compared to 22-23%, while maintaining the healthy EBITDA margins that we are currently doing.
Okay, can you just quantify that growth number for us when it comes to revenue? So now the picture is clear that it would be upwards of 20 to 23%, but what would be that number be?
So we have always guided that we will do about 1,000 odd crores by FY27, and you can expect at least a 150 to 200 crore upside to this number.
All right. Well, Saloni, let's talk about the CDMO and the CMO space as well a little bit, because from what we understand is that you will probably start seeing some traction in terms of, registering revenues from those segments in the third quarter. Can you give us some more updates around that particular segment, and as well as what this particular segment could look like for you guys maybe 2 or 3 years down the line?
So yes, we are seeing good traction in the CMO space. That's because we already have a legacy of 38 years in terms of quality, the regulatory compliance, the statutory compliance the company has. We have US FDA approval in place, which also helps penetration in regulated markets. One of our key CMO opportunities, which is with a European company called DSM Firmenich, we have already started seeing commercial transactions from Q3. So you can expect a good revenue generation coming in from Q4 of this year itself. We also have 2-3 launches which will come up in Q1, Q2 of the next financial year, which will start contributing to the revenue. So overall expectation is by FY27, CMO, CDMO should contribute closer to 20% of the total revenue, if not more.
Understood. And also, Saloni, what is your plan when it comes to capex? Because your Lotte Parshuram Model E has been inaugurated. Now, is there any meaningful capex that we can see in FY25?
So, yes, like you rightly said, we are very happy to announce that we have already inaugurated our Module E, which is going to be our largest production block so far in our facility. It's effectively doubling our capacity from 450 KL to 900 KL. It's a large setup, fully automized state-of-the-art block spread across 5,000 square meters. So we have already done about 125 crores of capex this year. So next year, you can expect about 100 crores of capex. I feel the majority of the capex has already been done in this year. And with Module E, we can reach that 1,000 crore mark with the existing capacity what we have. But 100 crores you can expect in the next year, mainly for debottlenecking and refurbishment of the existing blocks. And Ambernath site, what we are setting up now for contract manufacturing in the finished formulation space, there we'll have to do some capex. So about 125 odd crores this year and 100 crores next year.
All right, Saloni, we leave it at that. Thank you so much for joining us and giving us more insight with respect to your business as well as what we can expect going forward. Again, look forward to touch base with you once again over the next few weeks and quarters. Thank you so much for joining us.
Thank you so much for having me. Thank you.
All right.